Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a recap of those international and local equity markets as mentioned, and it was somewhat of a divergent performance on the local/regional side, somewhat of a lackluster first quarter, whereas on the international side, markets seem to climb several walls of worries and end in positive territory. Let's take a look at how those markets would have fared and what investors might expect in the coming quarters of fiscal 2023. And turning firstly to that local side of things, the All-TNT index in that yellow color would have declined just about 1.7% over the first quarter. That the Trinidad and Tobago Composite Index, which comprises all local as well as cross-listed stocks, would have declined just about 1.5%. And that cross-listed index, of course, would have declined just about 0.9% in that green column. The recently launched Caribbean Exchange, or Caribbean Index, rather, would have declined just about 1.9% over that first quarter. And of course, the Caribbean Index would include countries such as, or exchanges including Trinidad and Tobago, Jamaica, Barbados, as well as Guyana, including others. Now, when we take a look at some of the major movers on the Trinidad and Tobago Composite Index, we can see that First Caribbean International Bank would have advanced just about 32% over that first quarter period there. So it's certainly improving revenues and attractive valuations would have helped First Caribbean, or FCI rather, improve over that first quarter period. Also, Prestige Holdings Limited and Agostini's would have advanced just around 17% to 18% respectively, driven by improving earnings. Certainly, Prestige would have posted very strong fiscal 2022 numbers as well as a first quarter earnings figure in 2023. LG Williams B shares would have increased just 7% also, and Unilever Caribbean would have advanced just about 15%, recovering nicely from a roughly 20% decline over fiscal 2022. On the other end of the spectrum, GMMB Group Limited was down just about 12%. TTNGL down just close to 14%. Whitco continues its slide down 20.5% in the first quarter of 2023. NCB Financial Group also down 22%, and Guardian Media Limited down just around 25% also for that first quarter period. So certainly divergent performance on the local equity index across individual stocks. When we turn to US markets, we can see that despite several significant or important developments, including geopolitical tensions, continuing inflationary pressures, although somewhat lower, and policymaker uncertainty, the Standard & Poor's 500 or S&P 500 index did advance 7% to close a fairly strong first quarter after what was a forgettable 2022 performance. Now, it was not all even performance across sectors. Best performance sectors on the US markets would have been technology, which was up 21.3%, communication services up 20.8%, and consumer discretionary up 15.8%. On the other end of the spectrum, the worst performance sectors were energy down 5.3% and financials down 6.1%. Regionally, across international markets, it was pretty good news. Generally, European markets did advance in US dollar terms, up 9.4% in that first quarter of 2023, compared to that decline of 5.2% in the first quarter of 2022. Asia ex-Japan also increased 3% for that first quarter of 2023, and Latin American stocks also advanced just about 3.6% as well. So all in positive territory across major regional market performances for that first quarter of 2023. Now, what can investors expect going forward? Well, at the local level, some of the themes remain generally, or market drivers rather, remain generally intact. That economic recovery is one that is still on the cards. The IMF would have recently forecast that for 2023, Trinidad and Tobago economy is expected to grow just north of 3%, 3.2% in fact. However, keeping an eye on inflationary pressures and the impact that is going to have on weakening consumer demand, that economic recovery for 2023 could be up in the air a bit. And of course, that would be further compounded in terms of outlook by the fairly weak energy sector recovery, particularly with the retracement in pricing of energy commodities such as crude oil and natural gas prices at benchmark levels or global benchmark levels. At the international level, we can see, or on the international side of things, we can see that U.S. inflation has been persistent, however, is cooling just a bit as we head deeper into 2023, but still one of the major themes that's going to affect policymaker direction, as well as financial or investor sentiment going forward. Financial system instability with a couple banking failures on both sides of the pond, both in the US as well as in Europe, will also weigh on investor sentiment. Moderating supply disruption should be a general positive as those concerns start to abate, but those geopolitical tensions, particularly with the US and countries such as Russia and increasingly China, could weigh also on investor sentiment going forward. However, that does not seem to have affected investor sentiment and market direction adversely over the first quarter of 2023. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com or check out our website, bourseinvestment.com, where all of our research is absolutely free. And until next week, we'll see you next time. Do have a safe and productive week, and of course, a very enjoyable Easter holiday. This has been the Bourse Report.